Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Welcome to the Crypto Buzz by Kalkine TV. My name's Sage. Institutional investors rush to crypto products that bet on price declines, posting record inflows as the collapse of digital asset exchange FTX rippled across the industry and significantly weighed on market sentiment. According to weekly data from digital asset manager CoinShares released on Monday, has the contagion been contained after FTX's fall is the question on most people's lips at the moment. And crypto products and funds saw inflows of $44 million as of the week ended November 18th, but 75% of those inflows represented investments in short crypto products, data showed. The total assets under management have plunged to $22 billion, the lowest in 2 years, CoinShares said. And the crypto market, which was once close to $2 trillion, is now significantly under $1 trillion. And FTX filed for bankruptcy protection in the United States more than a week ago in the highest profile crypto implosion to date. FTX's downfall came after traders withdrew $6 billion from the platform in 3 days and rival exchange Binance abandoned a rescue deal. And last week, the executive hired to steer FTX Group through bankruptcy, John Ray, offered his first findings of improper fund transfers and poor accounting at the collapsed crypto exchange, describing it as a complete failure of controls. And even for the corporate fraud historians, the scope and audacity of FTX's con has made many of the crypto sector bewildered. And we'll be right back after a short break with more. Thank you for joining us for the Crypto Buzz. More about FTX's downfall. For traders and investors, every word that comes out of Sam Bankman-Fried's mouth at this point increases the likelihood of harsher regulations in the crypto space, both in the US and elsewhere, and token prices are likely to remain under pressure even through what has been the longest bear market in crypto's history, as more fears over the regulatory hammer falling loom. In a conversation with a Vox reporter published last week, Bankman-Fried blamed FTX's collapse in part on messy accounting, expressed regret at his decision to file for bankruptcy, and denigrated US regulators in profane terms. He later said he did not intend for the conversation to be made public. And CoinShares data also showed that Bitcoin posted inflows of $14 million, but when offset by inflows into short investment products, the net flows were a negative $4.3 million. The AUM, or assets under management, on short Bitcoin was at $173 million, not far from a high of $186 million. There were minor outflows of $800,000 for Ethereum, the second largest blockchain network, and investors poured in record inflows to short Ethereum products of $14 million. There was a slew of outflows across most altcoins, most notably Solana, XRP, Binance and Polygon. The US Attorney's Office for the Southern District of New York spent months working on a sweeping examination of cryptocurrency platforms that have US and offshore arms, including FTX's massive exchange operations, the report added. A representative of the concerned US Attorney's Office declined to comment on the matter, while FTX did not immediately respond. The implosion of FTX has spread ripples across the industry, hobbling liquidity at firms with exposure to what was once one of the world's biggest crypto exchanges, prompting investigations by regulators in several countries. It has fanned fears about the future of the crypto industry after FTX outlined a severe liquidity crisis. And earlier this month, FTX filed for US bankruptcy protection, and its founder Sam Bankman-Fried resigned as chief executive after rival exchange Binance walked away from a proposed acquisition. Several crypto firms have since been bracing for a fallout from the FTX collapse, with many counting their exposure in millions to the beleaguered exchange. Thanks so much for watching this edition of Crypto Buzz. Please do keep watching for more market insights and business news. Sage signing off.